In the Bitcoin protocol, changes can be made in two ways. There's a simple way called a hard fork, where someone essentially makes a copy of Bitcoin, makes changes to the protocol, and releases it to the world. Miners need to connect to this new network and choose to use this new network over the original Bitcoin network. This was done by projects such as Bitcoin Cash and Bitcoin Satoshi Vision that were trying to solve what the founders thought to be problems in the Bitcoin network.
There was a scaling attempt to allow Bitcoin to continue to be money for the world. And it was called the SegWit 2x agreement, where SegWit, which is, if you're deep into crypto, you already know what that is. If not, don't worry about it. And the block size were going to be upgraded from 1 megabyte to 2 megabytes, which would, if you do both those things, you're going to get more than double as many transactions available on the Bitcoin network. If you do just the 1 megabyte to 2 megabyte, you double. Add SegWit, it's a little bit more on top of that. Anyhow, for whatever reason, the SegWit portion of that agreement was activated first. When that 2 megabyte upgrade eventually was aborted, I had to look around the world and say, okay, well, if I want a tool that can enable every human being on the planet to be able to send and receive any amount of money with any other human being on the planet, Bitcoin can't do that. It's not going to do that with 1 megabyte blocks. It's impossible for Bitcoin to do that. So there's a whole bunch of other cryptocurrencies out there. Which one do I think is the most likely to bring the most economic freedom to the most people around the world in the shortest amount of time? And I looked at all the different cryptocurrencies out there, and Bitcoin Cash was the one that was at the top of my list.
Since their launch, these projects have failed compared to Bitcoin, losing value against the first cryptocurrency, because the people that are positioned in Bitcoin didn't want to transition. This reluctance was mostly due to one reason: decentralization. Decentralization in Bitcoin is the fact that no one controls the network. It is an open, secure network, controlled and improved by every participant. In projects like Bitcoin Cash, the number of participants being much lower than in Bitcoin lowered the security. Bitcoin Satoshi Vision is a great example, as it was the victim of a 51% attack in 2021.
A miner's performance is based on the amount of computational power they have, and this is usually referred to as hash rate or hashing power. The mining power is distributed over different nodes across the world, which means it is not in the hands of a single entity. At least it is not supposed to be. But what happens when the hash rate is no longer distributed well enough? What happens if one single entity is able to obtain more than 50% of the hashing power? One possible consequence of that is what we call a 51% attack, also known as a majority attack. A 51% attack is a potential attack on a blockchain network where a single entity or organization is able to control the majority of the hash rate, potentially causing a network disruption. In such a scenario, the attacker would have enough mining power to intentionally exclude or modify the ordering of transactions. They could also reverse transactions they made while being in control, leading to a double spending problem. A successful majority attack could also allow the attacker to prevent some or all transactions from being confirmed, or to prevent miners from mining, resulting in what is known as mining monopoly.
The second method to make changes is called a soft fork. In a soft fork, changes are made to the protocol and need to be accepted by the majority of miners. To do so, miners simply decide whether they want to upgrade to the new protocol and update their machines. And eventually, if approved by the majority of miners, at a predetermined block number, the changes will be made official, and this is how miners will verify blocks from that point on. Unlike many other protocols, every change that is made to the Bitcoin network needs to be backwards compatible. This means that if someone holds Bitcoin, their Bitcoin will still be valid after the changes. Other networks may be easier to change, but won't be backwards compatible, and will often require holders of the coin to transfer their coins to platforms that will accept the changes before a certain date, or risk losing everything. There will be a maximum, and this is hard-coded, a maximum of 21 million Bitcoin produced by the year 2140, and there will never be more of it. So we can't afford to lose some Bitcoin simply based on a bug fix, a functionality implementation. Is just something that cannot work. Therefore, every change has to be backwards compatible, and this makes it so much more difficult to change, as opposed to other projects that don't care much because they have a management team that is there that will decide what new vision they have for this coin and will make updates regardless of what the community thinks, because they think it's what's in the best interest of the community. The fact Bitcoin is so difficult to change is one of the reasons that make it a great asset for the long run. Buyers know what they're buying, and they know that the asset will remain the same. No other asset in the world provides this level of security.